It's been a year of an unbearable tax regime, with salaried Kenyans particularly hard hit. From increased pay-as-you-earn tax bans to the housing levy, Kenyans have had to find alternative ways to make ends meet. Victoria Rubadiri takes a look at the painful hit to payslips in 2023.
After its tabling in the National Assembly back in May this year, the Finance Bill 2023 was the first indication that things were going to get tougher for Kenyans in the formal labor sector. The bill was subjected to intensive public participation, with the Parliamentary Committee on Finance proposing several changes to the original draft. One of the major changes was the adjustment to the pay-as-you-earn tax bans that targeted high-income earners, with those earning more than 500,000 shillings a month hit with a 32.5% deduction. Persons earning above 800,000 shillings now part with a 35% tax deduction. Then there was the controversial housing levy that required payment by both the employee and the employer at a rate of 1.5% of the employee's gross monthly salary. Though the High Court in late February declared the housing levy unconstitutional, it later stayed the ruling until January 10, 2024, with the government set to appeal the decision. The judges ruled that to introduce the housing levy as per the Finance Act 2023 would violate the principles of taxation for making distinctions between formal and informal sectors, therefore creating unequal and inequitable principles. They added that the enactment of laws must be supported with a rational explanation, but in the case of the housing levy, the government failed to provide an explanation for the imposition of the levy or a legal framework to anchor the fees.
We must do it. Korea did it, Singapore did it, Malaysia did it, and that is why they are ahead of us. We know what we must do, but we cannot gather the courage to do it. But this time round, whatever it takes, we are going to implement it.
The levy, however, continues to be deducted, and Kenyans have been feeling the pinch, namely in the August payslip that jolted Kenyans into the reality of the new tax regime. That month, the government recouped double the housing levy deductions when it was backdated to July this year. This was compounded by the fact that Kenyans were parting with more for their National Social Security Fund contributions since February this year. The mandatory retirement deduction went from a flat rate of 200 shillings to a maximum of 1,080 shillings, and as many other salaried Kenyans, Festus, not his real name, felt the pinch almost immediately. The civil servant says despite a 6,000 shilling increase in his basic salary, the new deductions ate up all the gains from the raise. So they increased. So when I was calculating, I realized that it was just a margin of around 1,200 on the gross increase. Beyond union dues, loan repayment deductions, and pension scheme deductions for civil servants, we took a look at the impact of the deductions on Festus's most recent payslip compared to last year. Festus, whose basic salary was slightly above 55,000 shillings, reached 82,000 shillings after allowances in January last year. His take-home at the time was just above 29,000 shillings. Despite the pay rise, his take-home for November this year was lower at slightly above 28,000 shillings.
As I use like 2,000 as my fare, that 2,000 has been taken to tax. So definitely I mean that I have to walk to school.
According to the Employment Act, deductions, whether statutory or voluntary, should not exceed 2/3 of total salary.
It's not actually a fair deal. So, and you see, we are also expecting some more taxation. Because every now and then taxation ingine. It's like almost, come on, NHF, we are expecting labda itapanda. So when we are being taxed, it is a painful thing.
The newly created Social Health Insurance Fund could see every household pay 2.75% of their monthly income. For now, however, a conservatory order is in place, halting the rollout of the Social Health Insurance Fund, pending the hearing of a case challenging the constitutionality of the new health laws. The injunction will hold until February 7th, 2024, when the case is expected back in court. Victoria Rubadiri, Citizen TV.